So to begin with, what I'll start out covering here is what we touched on a little bit yesterday, which was a few things. One of the biggest factors we touched on yesterday was changing what I termed as your perception of success. And if you didn't get a chance to watch that video yesterday, it cut out, or I had something happen at 45 minutes in. So I didn't have a whole lot else to cover. I mean, there's 4 or 5 other points. These just tend to go a little bit faster, a little bit easier to explain. So let's do that right now. I'm going to bump this up even a little bit closer to myself. Maybe that'll give it a little bit better range for you guys. But so talking about that perception of success, what that was doing is that's just trying to shift your mindset. That's trying to shift your mindset to where you look at going into the day, and instead of, like we talked about yesterday, instead of having a situation where you're going into the day and saying, okay, I've missed this target month after month, well, your subconscious, again, it has a memory. Going into the next month, that's why when you have, this is probably the best way to explain it. What do you guys feel when you have a week's worth of winning trades or 2 weeks worth of winning trades? And I'm not talking every trade, but a good chunk of them. You likely feel some confidence, but in the back of your mind, what you also feel or know is, hey, when's this thing gonna blow up? When am I gonna have, the chart's going up, but when am I gonna have the down that I've had for the last 2, 3, 4, 5 years? And the longer you go in that process, the harder it is to break out of it. But that's what the goal was of the perception of success idea, is it kind of shifts you out of that regardless of how long you've been trading. All right, so today's Trump news, just by the way, the euro came back. Yeah, I shorted into the highs. I'll do a video on that actually. I'm not saying necessarily that's part of the strategy either. It was a very aggressive market manipulation setup. Maybe I'll do a video on that since you asked a question. I'll do that as the next video. And I always show you my order entries. That way it's not, don't trust anybody, myself included. If somebody's not showing an order entry, don't trust them, me included. Okay, let's start off here. Number 6, because we covered 5 points yesterday. So we're going to touch on, I'm looking over here at my notes just to see what I want to cover first. Let's go ahead and cover writing out a growth chart. Now, I'm not going to spend a ton of time on this because I've covered it in other videos. One of the videos specifically is the 4 pivotal rules of success, or trading success, or the Forex beginner's guide. I didn't really know what to title that, but honestly, regardless of whether you're a beginner, the point is, if somebody's not profitable, that video is just super useful. One of the things I point out in that video, though, is creating your own compounding chart. And what that means is that you're going to go and you're going to write on a piece of paper. I recommend getting a pen, a piece of paper, grab your calculator, whether it's your phone or whatever it might be. For this one, I'll grab a phone and just do some basic math here with you. But what I did in that video is I started out, and you write this on the top of your piece of paper. You start out with a balance that's reasonable to you. So I'm just going to use 10,000. This could be $100. It could be $1,000, could be $100,000. I'm just using this as a reference because it illustrates the power of compounding, which is the entire goal of this, to get you in a better mindset, to force you to be disciplined, to force you to be patient. And I'm going to explain why that does this here in a second. So there's your starting balance, and what you're going to do is you're going to compound it month by month, and you're going to compound it by a rate that is reasonable to you. So I always say run multiple different numbers. Run the numbers at 5% growth a month. Run the numbers at 10% growth a month. Run them at 12%. Run them at 2%. And just compound those numbers out for, I would say, 5 years. That gives you a really good graph. And sit down for an hour and just do this one day, or 30 minutes, however long it takes. So number 1, 10 grand, if you did that, if you compounded it at 10% a month, and I'm not saying you should expect that, I'm not telling you that should be your goal, I'm just illustrating basic math here. That's what I'm doing. So if the basic math states that if you take $10,000 and you compound it at 10% a month, what does that equal the next month? Well, this is pretty easy math to begin with. So you take your 10 grand and you add plus 10% to that. That gives you $11,000. Again, it's pretty easy math to begin with. And then what you're going to do is you're just simply going to write down $11,000. Then you're going to go to the next, you're going to do the same thing for the next one. Plus 10% equals 12,100, and you're going to keep going. And you're going to continue at this number, and you're going to be compounding the balance month on month. What you'll find is that at the end of 3 years, at this rate, you're sitting at just over. Any guesses on this one? Feel free to write them in. 3, 2, 1. Any guesses after 3 years? All right. Any guesses of what this goes to after 4 years? If you're 250K in 3 years, where are you at in 4 years? So this is, again, compounding 10 grand at 10% a month. It's just under $1 million. Now, most people are happy to go to college for 4 years, come out of college with a big-ass student loan, $30,000, $40,000, $50,000, $60,000. That's if you didn't go for some type of more complicated profession, such as being a doctor or something along those lines. But you come out of there, you go to school for 4 years, and you come out of there at least 4 years, and you come out of there with debt and the prospect of making maybe 40, 50, 60 grand if you're in the States. Maybe a little bit more, 70, 80, depending on where you're at in the States. Or with Forex, which people seem to say, God, I can't even fathom looking at a 4-year growth chart. And it's really weird when you compare the two. But this is the secret to success. Albert Einstein said that the eighth wonder, or compound interest, was the eighth wonder of the world. Now, we're not talking about compound interest here, but the principle is the exact same, and that is compounding, taking a balance and allowing time to compound that. Because I can promise you one thing, you will never gain as much for your account as compounding can gain for your account. And what I mean is you won't be able to take a $1 million account, turn it into 2 million in a month or 2 months. The power to that, and don't take that number, just whatever number you want to apply to that. You're not going to have ridiculously high doubling. What you're going to do to double an account is you're going to need time, and you're going to need steady, consistent gains. You don't need huge gains. Even on 5%, this gets pretty darn spectacular. And that's not even adding to it. Imagine if you could add $1 grand or $2 to that account based on your growth every 3 months, or based on your just regular job every 3 months, something like that. That takes the beginning stages of the compounding, which is obviously the slowest. It takes it from being already relatively fast to super fast. So again, you don't need huge numbers. And that's what this shows you. So what does that do for you? Because all this is based on psychology and getting you in a better state of mind. What do you think what this teaches you? If you had this compounding sheet sitting by your computer as you're trading, and you take a nice trade, then you take a loss and you get pissed. And maybe there's some random news. Like, for example, I talked about the euro short I took, but I was in a euro short prior to that news coming out. So I took a loss on my original short, and I work off 2-to-1 reward to risk ratio, so it ended up working out all right. But the point is, I took a loss on that first setup, so it could be very easy to start just revenge trading, chasing the market. What this does for you is this gives you, number one, it gives you discipline. It gives you discipline because you know that if you don't act like a jackass, which we all do. I mean, I speak for myself on this one. I was the king of making stupid decisions. I mean, it took me 3.5 years before I was consistent. Not saying that's a long or a short time. I'm just saying, it was a long time for me, I guess. But it takes time to get to that point because you're going to make those stupid mistakes. So putting this next to your desk, putting this next to you while you're trading automatically makes you more disciplined. It shows you what you can do if you don't make the stupid mistakes. It gives you patience. It gives you patience to wait for the correct setup because you know that you don't need a huge number every month. What you do need is a consistent number every month. Again, you don't even need that. That's a big high number. You don't even need that number. So discipline, patience, and many other factors when it comes to trading, it's just a constant reinforcement of proper trading technique, waiting for the correct setup, staying disciplined to wait for that, not getting sucked into a boredom trade, not getting sucked into revenge trading, over trading, doubling down. It's a constant reminder that should be sitting right in front of your face while you're trading. That right here, along with the perception of success idea and just the basic idea behind that, those two are probably, from a psychological standpoint, probably some of the most beneficial points I've made here. By the way, guys, if you're on Facebook, I can't see your comments. I thought I'd be able to get comments here, but unfortunately it doesn't show. If you're not on the same computer, it does not show on Restream. It does not show me both. So I'll have that set up for next time. But if you're on Facebook, I can't see your comments. So, feel free to leave a comment and I'll reply to it after the video. But if you want a live comment, you got to look at it on Facebook or on YouTube, sorry. Alrighty here. So we covered a main point there, which is writing out your growth chart and putting it next to you, having that thing sitting next to you while you're trading. That just critical to me. Now, the next thing that I see all the time, and you guys got to remember, when I come to you with any idea, it's not based on my opinion. It's not based on Sterling being extra intelligent or having something you guys don't have. It's just the fact that I was fortunate enough to start in this business when I was 17 years old. That's a massive advantage, I believe, because I didn't have the responsibility. I could lose money for 3-4 years very easily because I still had, essentially people taking care of me at that point. So one of the things that I've seen through that time, starting at such an early age, seeing it in my own trading, seeing all the mistakes I made in my own trading, and then I started running day trading Forex Live in 2010. And as I always say, I've had the opportunity to speak with at least 50,000 traders. It's probably a heck of a lot higher than that when you consider the number of emails that I get on a daily basis. And over that time, well, we've talked about some of the bigger issues. Another issue that I see over and over is the fact that people jump from one strategy to the next. So what I want you to do is, when you look at your own record, sorry about that. These things are thoroughly irritating. Can't wait to get my electronic board here. But system jumping is just an absolute massive killer. One of the things you'll find among greats in any field is they're specialists. They're specialists in that little one thing. You look at entrepreneurs, they tend to be specialists in little things. You look at people that do sports, they're absolute specialists in that sport. And normally within that sport, they're even a specialist at a very specific position. So if you want to be the best at something, it just, based on every analysis of any other field and high achievers overall, they find exactly what they want to do and then they stick with it. So bare minimum, what I say, if you're looking at, if you found, and this is the key also with finding an educator, is I hate to jump around like this, but as you find an educator, there's really two things you need to look for. They need to prove to you that what they do works live in some type of format, and then also, too, look at their reviews. I mean, those two things will eliminate 90-95% of scams. But assuming you found somebody that is a proficient teacher, they show it to you live in some format or another, how much time do you give it? How much time would you give a strategy to really determine, is this going to be it for me or is it not? In my opinion, the number is 3 to 6 months. Now I say 3 to 6 because you might get into it and you might go, you know what, maybe you picked short-term trading, for example. You might get into it and you might say, you know what, I like short-term trading, but the fact is I'm going to have some type of job while I'm trading. I'm going to have some type of job to learn this, to have the money to pay for education, to have the money to put into a live account to start trading, start practicing with. And you're gonna kind of get a feel for that over time, and you might say with that type of day trading strategy, hey, I just can't do this. I need a strategy that requires less time behind the screen or can Or conversely, you might have went to a longer term time frame. And then now you might be looking for a strategy that's on a shorter term time frame, just doesn't need as much time behind the screen. Or whatever variable it is, but assuming you've found an educator that meets those real basic criteria that I talked about, then the key there is sitting with the system for at least 3 to 6 months. I mean, if you don't sit with the system for 3 to 6 months, get your trading plan done, and then start working at implementing that trading plan and make a fair analysis of it. Like we talked about in the 20 trade challenge, if you're placing 2, 3, 4 trades and then you're going revenge trade, overtrade, double down, boredom trade, system jump to I'll trade this breakout and then I'll trade this Gartley pattern and this, bearish pennant or whatever it is. If you're doing that, you can't evaluate the system. So you need to be honest with yourself too. 3 to 6 months of placing trades that are 100% by the book. If you're placing trades in another strategy or with another strategy, track it differently. Have a different account. It's the only way you're going to know if what you're doing there is right. So just some common sense stuff, guys. But I see it. That's not rocket science. I know it's not. I know I joke about this, but it's funny that you see it, even though it's a really basic point. If we all do some self-examination, you'll likely find you've not given things anywhere near the length of time that I believe is required in my experience of teaching traders. I wrote the book on system. Yeah, I did a fair bit of that myself when I was starting out. I mean, I can't say it's all bad, though. I met a guy that about 2.5, 3 years into my trading, I met a guy that I credit for making me a profitable trader. It wasn't strategy he taught me. He was a news trader, and he also traded 1-hour trend lines. But he taught me about patience, discipline, the fact that profitable trading is much less about the rules of your strategy versus your ability to actually follow that strategy. And that was such a hard point for me to understand. And I still think it's probably hard for a lot of people to really grasp that until you're profitable. Okay, let's see what else we got. We got 3 more I'm going to go through. One is going to be, well, maybe out of the last 3, these next 2 are kind of tied together. So let's put these together. What I've written down here is you cannot have the weight loss mentality. And number 2 is to grow, you must suffer. And in anything in life, I don't care what it is, whatever you're learning. If you want to learn to run a marathon, you're going to suffer. If you want to learn to fly a plane or whatever it is, there's going to be certain things you have to give up. Flying a plane, speaking from personal experience, a lot of money you're going to have to give up. When it comes to learning to trade Forex, one of the things you're going to have to give up is a significant amount of time. So this goes back to just how much somebody wants it. If you find yourself dedicating 3-4 hours a night to watching TV, but you can't dedicate an hour to learning to trade, then you got a problem there. And that goes with the other point I made, which is you cannot have the weight loss mentality. What do I mean by the weight loss mentality? Well, just look up any weight loss program or any system for losing weight, any diet, any pill. What do people always want? They want the solution. They want the fast solution. That does not exist in trading. I hate to tell you, there is no EA that you're going to buy for $59 that's going to make you a successful trader. There's no strategy you're going to buy where you're going to read the course, my strategy included, where you're just magically going to be a better trader. Or magically going to be a profitable trader, I'll say that. There's a lot of educators that'll tell you otherwise, but I think your own experience will tell you that that was a blatant lie. If any, at the very least, if it wasn't totally disingenuous, then they're misguided themselves. It just doesn't work like that. There's a process involved. There's a long process involved of really understanding that strategy, getting proficient with that strategy specifically, and as you do, keeping the idea in mind that they've been selling weight loss pills for 100, 200 years. Why does that work? Because the human psyche, what's in here does not change. The weight loss industry, it works because people want the easy solution. The Forex EAs and software and all these get-rich-quick gimmicks, people promising you things that require no work, it's the same principle. They stick around because, again, the mind's the same. It's the same regardless of the market. So it's a dangerous thought pattern to get into that, I just got to find the right strategy. I just got to find, the right this or the right that. When at the end of the day, if you look at your trade record and you can't place 20 trades in a row in accordance with any strategy, then the strategy you trade is irrelevant, which means you got to focus right here. You got to focus on you fixing the errors you're making. Why are you revenge trading? How do you stop yourself from revenge trading? After you take 2 winners in a row, how do you stop yourself from getting overconfident and then placing the next trade that ends up as a loss because you were overconfident after 2 winners? Then you get pissed off on the loss and you start revenge trading. How do you stop that? Well, it goes back to you. And so staying away from that mentality, the mentality that there's some easy fix, there's some easy solution, there's really not. There's hard work, there's learning a strategy, then there's trading it with the most unrelenting discipline that nobody else does. And when you do that, you can produce a consistent profit in this market. Now, the final point I would make here is you think about any sport, you think about any sport out there, whatever it might be. Think about maybe basketball, and they call a timeout. Everybody runs over to the bench, and what do they look at? They look at the playbook, right? So it's no different in trading. I'm a firm believer that visual learning is the best. That's why I do a lot of visual learning at Day Trading Forex Live. It's why I do a live video for the members every day. It's why we do a live room every day. Because in my opinion, if you want to learn, number one, you need somebody showing it to you every day, but then you also need it visually shown to you, not just a course that illustrates some perfect illustration. The real world tends to look a little bit different. So what I mean by a playbook, I mean a playbook of successful trades. A playbook of trades that meet the criteria of your entry, because they're all going to visually look slightly different. The market was setting up slightly different prior to any trade you take. So as you have trades that come about, both winning trades and losing trades, if it is a trade that satisfies the criteria of your rule set, that is a trade that can go in the playbook. Now, maybe you want to have 2 separate categories. You want to have your winners and losers, and maybe you can draw some comparison from all your winners and all your losers, even though they might have all satisfied the strategy. Maybe all your losers are, or maybe 80% of your losers are during a specific time frame. You know what I mean? So what that's going to do is that's going to allow you to build confidence, number one, because you have this long history or a large playbook of profitable trades. But it's also going to help you identify patterns. And as you identify those patterns, and really the first part is more the psychological point, this is more the practical point, but as you identify those patterns, you can potentially identify ways to make your strategy better, make yourself more profitable, tweak what you're doing to where maybe you're right at break even and all you need is just that one little tweak. So building the playbook of trades, it psychologically is an advantage because it's a constant reminder of this strategy, whatever it is, working, because you can look at a history of them working. But in the real world, it's also a great way to analyze your trades, especially if you separate them into 2 different categories. As a third point, if you force yourself to print out every trade you take, what is that going to do for you? Now, I'm sure most of you are kind of chuckling because I look back to when I started trading. And I mean, shit, there's days I'd place 50 trades in a day. So imagine trying to print out 50 trades. You're not going to like that very much. It's just one more way you can reinforce to yourself, hey, this trade does not meet the criteria. So am I going to print this one out? Well, hell no. It's not meeting the criteria. Well, why are you taking the trade? So it's almost one more reinforcer of, let's wait for the right setup. Let's not take some willy-nilly setups, some random setups. Let's wait for the right setup. so that this thing can go in the playbook and I can put it in the playbook with confidence, knowing that either if it's a winner or a loser, either way, it satisfied the criteria of the strategy. All right, let's see here. Oh yeah, it's huge. I mean, I think I saw some. Let's see what we got here. Just completed the 20 trade challenge this morning with DTFL. Since May 2nd, I'm 10 wins, 4 losses, 6 break even, 16 pairs, 20% net profit so far. That's awesome, man. See, that's when people ask me why I teach, imagine what that can do to somebody's life. You take them from a shitty trader, I'm not, no disrespect. I mean, we were all crappy traders at one point, and you turn their trading around. People ask me why I educate. Of course, day trading Forex Live makes money. Any educator that tells you they would do it for free, well, then tell them, say, why don't you? But when you can take somebody and, you know, maybe they're losing for 6 months, a year, 2 years, that's a pretty awesome feeling. And then in addition to that, the community is a huge help. So whatever education you go through, guys, make sure they have a community. You all might not want to learn what I teach. You might like price action on a daily chart, you know, and there's plenty of people that teach that. So just make sure you get that live education. Make sure they're proving what they do works, because that's how you get those type of results. Somebody actually showing you that what they're doing works. Psychologically, that's going to build confidence in you. The community is going to build confidence in you because you see others achieving the success that you want. That's why I say that all that stuff's important. It's important not just from the logistical learning it aspect, but also from the psychological aspect. All right, let's see here. Yeah, I mean, you take a loss, that is, you're going to have some for sure. And then regardless of the strategy you follow, you got to have that mindset of, I don't want to take a loss. Yeah, see, that's awesome, man. 3.5 years into losing and starting to see some success. I mean, you're going to have ups and downs along the way for sure, but you know, you're seeing progress. That's the key. 1 minute binary options might be the greatest way to lose money. So I mean no disrespect by that, but binary options, you can't achieve a positive reward to risk ratio. So if you risk $100 on a trade, you're only going to make 80. And if you can't achieve even a 1-to-1 reward to risk ratio, I mean just absolute bare minimum 1-to-1. So binary options by default, in my opinion, are a scam. And I know that a lot of people don't like to hear that. For some reason, binary options has a damn near cult following. But every single trader I know, and you can prove this to yourself by the book that Tony Robbins wrote called Money Master the Game. You can go on Amazon, you can buy it right now. He talks with people you'll never have the chance to meet. I'll never have the chance to meet. People like Warren Buffett, Ray Dalio, people that have traded and have been investors and the most well-known successful investors in the world. And what I found that was really unique about that is every single one of them had different strategies, different investment tools they would use. Some did businesses, stocks, all different options. But there was one thing that every single one of them mentioned, and it was what they term in the book as asymmetrical reward to risk ratios. And all that means is, in very simple terms, is if you're risking $1, you want to make $2. But I just thought that was funny. Every strategy they traded was different. But the one thing that every single one of the people did that he talked to is they all focused on and pushed hard their reward to risk ratios on every trade, any investment, because that's the key to trading. All right, guys, well, I'm going to probably wrap it on up then. This has been part 2 of the trading series on trading psychology tips and tricks. As always, make sure you leave a comment below. Let me know what you guys want to see in these live streams. I'm going to be doing them quite a bit more. I might have to take a break in the next coming week or two just to finish up actually I'm going to Mexico for a week, and then I'm going to try and finish up the new revision to the bank trading course. So I might have to take a little bit of time off it. I'll maybe do some live streams from Mexico on stuff. But if you guys have specific topics you want covered, different aspects you struggle with, anything along the lines of trading and wanting to get some feedback. I mean, I've been trading for 15 years, and while I don't know everything about the market, and I think everybody should continue to learn regardless of how long they've been trading, I do have a fair bit of information, and so I'm happy to share that with you guys. That's why I say, let me know what interests you, what you're struggling with, and I'll be happy to get back with you on that. Also, if you're on YouTube, make sure you subscribe, hit the notifications. You'll see when I'm going live. I'm not sure if you can do that on Facebook. I'm not the most tech savvy with that. So if you can, be sure to subscribe to that as well, and you'll see when I'm going live, because I don't announce it in advance. That's why I say that. I just don't know when I'm going to go live. It's whenever I have some time. So hope you guys enjoyed the video. I don't think there's any other questions here. Nope, doesn't look like it. All right, guys. Well, feel free to leave a comment. We'll get back with some of the things you want covered, and I'll see you shortly. Have a good one.